Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York. It is Friday, happy Aloha Friday as we say on the islands. Last day of the month, 31st day of July 2015, and this is the daily report for gold and silver, our weekend review, and in this case our month-end review. Gold closing moderately higher on the day, up about $7 when we look at the spot price, 95.17 with a low of 1080 and a high of 1103. When we look at COMEX, close in COMEX was 1094.40, up 570 on the day with a low of 79.20 and a high of 1103. I think the most interesting characteristics when we look at this market today, of course, is going to be to look at this market on a weekly and monthly basis. We'll look at the daily and possible flag formation or a compression triangle that we've identified over the last few days. But let's first take a look at our monthly chart. Absolutely no doubt we had a tremendous sell-off. In fact, the amount of ground that it lost, I believe about 6%, is the most that we have seen in the last 2 years. If you go back, you can see that the last time we had this kind of a sell-off was when this market was really bottoming out as it came from about 1,800 moving to these lows at about $1,200 per ounce. And as you can see, it's not since then that we have had this kind of a dramatic downturn in the market in terms of range. Now, the other real key element to me, and of course this is something we've been talking about predominantly throughout this month, is the fact that when we take a look at this move, and this is the bull run beginning at the end of 2008 up to the record and historical high of gold prices above 1900, and then we look at the 61% retracement level, very much I believe a line in the sand, 61 being a normal retracement. In other words, you can see a market move up X amount of points, retrace 61%, and then still be on an absolutely bullish tear as it moves up. That is a steep retracement, but an acceptable retracement nonetheless in a bullish model. However, once you really start to break below this point, you've got 78% below that, but once you break below this point, it's very, very hard to construe any kind of real bullish model. And so when we look at this market long term, of course, assuming that at some point we would see this market bottom and move back up, the recent activity of this month certainly doesn't bode well for any models that we would put together that could be construed as a long-term bullish model. Next chart that I do want to look at on today's show is our weekly chart. This is the weekend review. Nonetheless, when we take a look at the activity over the month, so we've got this week, the 2 prior weeks, so we'll call the month in essence these 4 candles here. What we really see is that the bulk of the sell-off, this 6% loss over the month, didn't come in the first week, but rather came in the second and third week, with this week being almost a consolidating type of candle, very much doji-like, very, very close open to close relationship. So we want to watch that closely, because typically as a market does go and bottom out, that is the kind of activity that we'll see. I normally will talk about the fact that I do the analogy of a railroad car going between LA and San Diego. And as it goes on this route, when it gets to San Diego, before returning to Los Angeles and reversing, in other words, going the other way, it has to do one simple step, and that step is to stop. It has to stop the momentum that was built up going to San Diego before it reverses and moves back to Los Angeles. So I always say that the doji is very much like a chart stop sign, in that it shows you that the momentum itself has really waned, and the fact that the open and close are so close together tells you that neither the bulls nor the bears in this week of trading, and look at the week of trading as a dynamic battle between a bullish faction and a bearish faction, but neither of them were able to gain real dominant control. Now, color is not all that important, because a pure doji, of course, is a open and close that are identical. However, we did have a slightly lower week nonetheless. And then lastly, what I want to really look at today is the most recent activity that we've seen when we look at these markets. Take a look at these lows that we have here, starting with this low at around, I believe, just above 1063, 1064 in that area. Higher low, yet a higher low, this low being made today at around, call it 1080. So we can easily construe the fact that you've got a series of higher lows. At the same time, if you look at these highs that are here, they're almost flat, but you do have a slight bias to the downside. So by connecting the dots, so to speak, on these, we then get a descending set of tops or a series of tops with lower highs. Lower highs, higher lows. That is a compression triangle because the definition is that the range is shrinking. Now, typically on a compression triangle, what you'll see is that the market has been in a defined direction. Very easy to identify the direction here. The direction is down. You then get that compression triangle, and typically when it reaches the apex of the triangle, typically, in other words, probability-wise, maybe 70% of the time, it will break to the overall trend of the market. In other words, it in essence is a consolidation period in which you have these lower pricings, markets moving sideways for a time, and then breaking down. I will tell you this. We have seen really throughout the week where we've hit these lows at about 1080 in that area, and on each occasion those lows happened overseas, only to see this market firming once global trading moved over to the United States or the mainland. And that's something that's noteworthy. I don't really know what to make of that, but I can tell you that we have seen the markets really sell off in London and in Hong Kong, only to kind of gain some sort of momentum or recoup once it hit the United States. We are short a position just a couple dollars from here, roughly at 1092. Our stop has been above 1107. My suggestion is obviously we want to maintain our current short position, maintain our current stop. We will talk to you on Monday for another daily update and review. This has been Gary Wagner, wishing you as always good trading. Bye-bye.